What is an independent mortgage company, and why would you possibly want to work with them over maybe your bank? We're going to talk about that next. Hey there, my name is Ryan Skaggs, and this is the Mortgage Minute. This channel is dedicated to everything mortgage, real estate, and interest rates, and we start with those interest rates. We've seen a nice decline. It is now mid to late January, seen a very nice decline over that peak that we saw in late October, November of 2022. Again, now into almost that end of the first month here, and we're seeing a decline in rates. We're now down into the low sixes, according to Freddie Mac right behind me, 6.15. That is paying a point typically in their survey. So check out the link below. You can run through that weekly survey where historically rates have been. If you're curious about points, I'll make sure and put a video that I've done about those as well. But today our topic is, why would you want to work with an independent mortgage company, right? So last week, and I'll link the video right up here, I went through and said 90% of all mortgages are fixed rates, at least from previous data. I think that will come down a little bit in future years just as adjustable rate mortgages kind of come back into play. But over 60% of borrowers chose an independent mortgage company. So a lot of people think like, hey, I need to go just walk into my bank cold and just say, hey, I need to get a loan. And just kind of hope that that's the direction you want to go instead of getting a referral from a real estate agent or from maybe friends and family that had a smooth transaction with somebody. But what is an independent mortgage company? That's what we really want to talk about today. So an independent mortgage company is what I call a banker. Now, this is my vocabulary. I break up the entire industry into the 3 B's. That is a bank, meaning you walk into a bricks and mortar branch, you have a checking and savings, they want to sell you a credit card, they want to get more products available for you. So that would be a bank. They're loaning out their own money, and they have one way of doing business typically. It is the underwriting policy is, kind of a one-way street. You need to fit down that exact line. If you cross over, you're not going to be able to get a mortgage, with that institution. There's one 30-year fixed rate, there's one jumbo rate, there's one anything rate, right? They have one way. Usually their processing, underwriting, things like that are very compartmentalized in different areas of the country. So maybe underwriting's in Minnesota and processing is in Nebraska, and their appraisal company is nationwide, let's say. That would be a bank. Hopefully you can kind of see where I'm going with this, is why that might not be in your benefit, right? On the other side of that coin is a broker. A mortgage broker is brokering the deal out using someone else's money. They know where all the money is at, they find the buyer, and they try to connect those dots, right? Typically what they're going to do is they're going to send the file out to be underwritten somewhere else. Let's say in this, they're going to send the file out to be underwritten in Detroit. Some underwriter that they've never met before, don't know, don't have a relationship with, underwrites the file, sends it back, they get the last condition, send it back again, get that clear to close, right? So that's their process. They don't have necessarily their own processor, underwriter, closer. They don't have their own resources, their own relationships, with that side of things. They do have a lot of options available to them. That's typically, a nice sell from a broker standpoint, is you've got a bunch of different options. So if you've got, a unique scenario of any kind, typically a bank is going to be a little bit more conservative, and they're not going to love that, type of weird scenario or a little bit off the beaten path. But a broker might be able to have that opportunity. That broker would use typically someone else's money to actually close the loan. So a lot of times, the closings do take a little bit longer. They don't have their own resources. Now, the independent mortgage company is what I call the banker. They're serving as the banker. They are using their own money, meaning the banker, right? But they're not a bank. So we have multiple ways, and this is where I'm going to start saying we, because I've been at a independent mortgage company for quite some time, basically 80% of my career, 10 plus years. And it's where I will, consistently be moving forward, because I do believe gives the client the best opportunity for really great rates, great terms, and the most product options available. Now, to be a banker, we're closing in our own money, right? So we're closing in our own name. Then we have the opportunity, as a broker might do, is to go find that end result of someone else that might service the loan. Maybe we serve it ourselves. Now, we do have multiple programs. And again, I'm speaking of independent mortgage companies, so it's hard to say we do all these things. So, each and every one will be a little bit different. And while I'm talking about this, you have to apply to get credit qualified to understand if any of these people are going to be able to give you a loan, right? Or any of these scenarios. So with that said, that independent mortgage company is typically going to provide, same or better kind of rate structure and terms as any of the other two, right? Majority of the time, they're loaning out the same money. They're going to have more programs typically than what some sort of bank or bricks and mortar might be, because they have different investors and different programs they might be able to do. They are able to shop for you, so they are able to go and look and say, investor A, B, C, D, E, F, G. Hey, this client, could go with any of these based on the guidelines, and let's find the very best terms for you, right? So, and then last but not least, which is my part of this, my biggest kind of selling point is from when I talk to clients, like, I want to streamline the process for you. I have my own team to be able to make a super smooth transaction. So therefore, you're not going up and down wondering if you're going to get a loan. Are you going to get the house? Pushing deadlines out, because guess what? You go and you look at like a bank sort of scenario, and it's more of a conveyor belt. You're just moving along from department to department to department. You might have a great loan officer up front, but that's just kind of their process. Versus like a broker, they lose control on the other end a lot of times, so they can't control that piece as someone that may be in an independent mortgage company. So again, my opinion, let me know what your thoughts are, but describing this to a client this week just made me think about, hey, I want to come back around and do a video. I talked a little bit about it in the past, probably a year ago plus, the last time I kind of had this kind of conversation about it. So let me know what questions you have. If you haven't already, if you made it this far, click that like button, click that subscribe, and click that bell icon to be notified as I'm putting out weekly videos on the channel. Thanks so much, stay safe, and we'll see each other again very, very soon.